And Nigeria's economy could be leaning against the wind as the country's external reserves fell to a 13-month low last week. Last Thursday, the figure slid to $33.79 billion as it dropped by $30 million. This is in spite of the continued recovery of global oil prices, which currently trades above $75 a barrel. Akintoye Oyelaku, investment analyst with Cordros Assets Management, will weigh into this, plus other issues making the headlines. Akintoye, thank you for joining us. Good morning.
Yeah, thank you very much. Good morning.
So there's been a sustained downtrend in the external reserve balance of the country, despite the continued recovery in oil price. This trend has stoked concerns about the ability of the country to support the import of goods. What are your thoughts around external reserves and import sustainability?
Yeah, thank you very much. So, as you have mentioned, we have seen a sharp decline since the beginning of the year. The external reserves has dropped from a peak of around $36 billion to $33 billion. Well, if you notice, earlier in the year, Nigeria repaid around $500 million in terms of external debt. This had an influence on the external reserve. We saw it declining. And also of recent, the CBN has started to increase the FX supply across various FX segments. And this has been what we have seen in the I&E window. The I&E window activity has improved significantly compared to in the past 4 or 5 months. And this led to some sort of gains in the parallel market also. We saw naira appreciating from 505 to the dollar to around 490 to the dollar. And this is one of the reasons why we are seeing sustained decline in the external reserve, basically the increased FX supply across FX markets. Also, we have seen the central bank informing banks that they can now increase dollar supplies to those that are traveling, maybe for schooling or for health purposes or any similar reasons. So this has also led to naira appreciating across the FX windows. So basically, if you look at the external reserve at this level and then look at what we expect for the remaining part of the year, given the fact that Nigeria is expected to get around $4 billion in external debt during the second half of 2021 of around $4 billion, this gives a potential upside to the external reserve. So we are likely going to see an accretion in the external reserves. And also when you consider the fact that Nigeria is considering issuing a Euro bond also in the second half of 2021, and this will also shore up the current external reserve balance that we are having. And lastly, when you consider the continued recovery in the oil market, we have seen that demand continues to strengthen, and OPEC has continued to, they have started to ease production cuts, which is very positive for Nigeria. So by the time you consider all these factors together, there's still an opportunity for a strong upside for the external reserve. So it is wondering about how sustainable import is for the rest of the year may not be something to really consider, given the potential for increased external reserve towards the end of the year.
Now, as the global oil market continues to trade with stronger optimism on the back of waning COVID-19 tensions, the naira is expected to remain stable in anticipation of increased supply by the CBN across the various FX markets. What are your views on the oil market recovery, and what should we expect in terms of naira stability?
Yes, so for the naira stability and the oil market generally, given the fact that oil market contributes a major chunk to our external reserves, and what we have seen since the beginning of the year has been sustained upward trend in terms of recovery, and we expect this to continue for the rest of the year. And we believe that with the rate of improved vaccination across the world and the reopening of economies, the demand for fossil fuel, which crude oil also is part of, will drive increased activities in the oil sector, which is also positive for Nigeria. And with the CBN already improving dollar supply at the I&E window, and also recommending that banks can now start to increase dollar access to people and businesses. So this is very positive for naira stability. So looking at the rest of the year, we might not see any significant depreciation or devaluation in naira if we continue to see increased supply of FX. However, the major concern is now in the long run, can we maintain naira at the current levels? Given the fact that we are still very much exposed to the oil sector, oil sector contributes around 85% or 90% to our export revenue. So there's a need for diversification of revenue sources. If not, whenever there's a global shock like COVID-19, we are likely going to see it impacting on the sustainability of naira's current value.
All right, let's look at other markets. Regardless of the yield moderation in fixed income instruments, the domestic equities market has been, largely bearish. What could be the reason for this bearish performance, and what is your outlook on the equities markets in the near term?
Yes, this week we have witnessed mostly bearish performance in the equities market. If you recall, in the previous 2 weeks, the equities market has seen a rebound. We saw buying interest in across major stocks, which led to a lot of price appreciation for these stocks. However, for this week, we have seen a lot of investors taking profit on some of the fundamentally sound stocks. Also, we have seen sell-off in major stocks like Airtel and other stocks such as Zenith. So these are the major drivers of the bearish sentiment or bearish performance that we have seen in the equities market so far. However, when you consider that the earnings season, half-year earnings season is around the corner, so by between July and August, we should start to see companies releasing their half-year results. This is likely going to drive sentiment in the equities market. So for those stocks that investors expect dividend payment, we should see some buying interest, especially those that have suffered a lot of sell-offs across the equities market. So we should see some buying interest in the near term.
Okay, so the Debt Management Office yesterday conducted a primary market auction after it reopened the March 2027 and, of course, March 2035 and March 2050 bond instruments. Given the outcome of the auction, how do you think this will shape investor sentiment for the remaining trading days of the month?
Yes, so for the bonds auction that we saw yesterday, it still continues to strengthen our opinion that the yields level in the fixed income space have breached their peak level. And what we saw at yesterday's auction was the stop rates for this bond auctions closed lower. So we saw a lot of buying interest, a lot of bid for these bonds, and we saw that the allotment was greater than the bond offering. So what this is likely going to do to the financial market is that investors will now try to be locking in on rates for the longer end, given the fact that one of the major metrics that investors look at is inflation numbers. And given the high base that we had in the second half of 2020, inflation moderation is likely going to continue, which means that the central bank may not tighten the monetary policy in terms of raising monetary policy rate. So yields may not go above the current levels that we are seeing. However, with inflation expected to moderate, we might see a lot of buying interest, which will likely drive yields lower from the current level. So what we expect to see is investors taking positions to lock in on yields for longer tenors, unlike what we are seeing at the beginning of the year, where most investors we are taking position in the short end of the curve, given their expectation that yields will sustain an upward trend. So at this current level, we expect to see some buying interest, especially at the longer end of the fixed income yield.
All right. In another development, lately there have been talks around the introduction of a digital currency by the Central Bank of Nigeria, which is in line with the global trends as central banks compete with, the growing adoption of cryptocurrencies. What is your view as regards the importance of a digital currency?
Well, when you consider digital currency with cryptocurrency, they both have their own benefits and disadvantages. One of the major reasons for the emergence of cryptocurrency has been the requirement or the request for a type of currency that is not controlled. That is, investors desire some sort of autonomy, and this has been one of the reasons why we are seeing a lot of buying interest for cryptocurrencies. Also, when you consider the fact that cryptocurrencies allow for easy movement of funds with very low costs, and this has also been a major factor which has supported the demand for cryptocurrencies. But if you look at the negative aspect of cryptocurrency in the sense that the cryptocurrency is very volatile, which means that it is not a good store of value. And this will definitely drive concerns for investors who do not want to lose money. For instance, during the year, we saw Elon Musk making some negative remarks about cryptocurrency, and we saw what happened to the cryptocurrency market. We saw a lot of sell-offs. Again, a lot of central banks are moving against the facilitation of cryptocurrency transactions on banking platforms, and this has been negative for cryptocurrencies. We have seen this especially in countries like China. China has continued to clamp down cryptocurrency transaction, which is very negative for cryptocurrency. However, when you look at digital currency that the central banks are issuing right now, the digital currency are more stable and they are backed by central banks, which means that they are a good sort of value. However, it does not solve the issue of autonomy in terms of the currency that is not being controlled by any central bank, that is free to the market to be able to determine what price it should be. Another negative for the digital currency is the fact that it might affect the rate of deposit with the deposit money bank. If we start to see the creation of digital currency, this may mean that a lot of people may prefer to keep their money in digital currency rather than in the fiat currency. So this is a negative one. However, the outlook for the cryptocurrency within the next 2 to 3 years is that there's going to be a huge sell-off in the cryptocurrency market. However, with the agitation for a sort of currency that has autonomy, the cryptocurrency could still regain buying interest later on. So there's still a future for...
So sorry, we'll have to leave it there. We'll run out of time. Thank you so much for your time on the program. Akintoye Oyinlakun is the investment analyst from Codrus Asset Management. Thank you so much.
All right, thank you.